Having said that, I built you a spreadsheet. You know me, play with spreadsheets. So let's go back here. Kind of wanted to go through each of these three loans that you've just talked about. Okay, so we've got the HELOC, it's at 6.2. And I know a lot of people think it's at 6.2, but the reality is it isn't. You're going to pay that currently off in 14.4 years, paying it at the payment that you currently have of $1,100 a month. Keep in mind, of that 1,095 or 1,100, of that 646 of that is going toward interest, 450 of it is going toward principal. So what that means is you have a volume of interest of 59%. In other words, every $1,000 that you pay into that loan, 590 of that is going toward interest. No way around that right now, except to get a private equity banking account, at least in my mind. So if you get the the private equity banking account, you then have two options. Option one, which is the one I think you guys would like the best. If you've paid this off and you've got that money in your account, remember, it is not a structured loan. You could choose or not choose to make a payment that month if you needed that $406. Just don't pay down on the loan that you've borrowed against from the insurance company. But be that as it may, you could keep the payment at 14.4 years, the duration, and have payments of only 774, or you can shrink the time from 14.4 down to 9.9 years. Again, regardless, now at this point, your payment, if it remains at 1,100 a month, 1,006 of that is going toward principal, and only 94 of that is going toward interest, and your volume of interest is 8.5. In other words, for every $1,000 you spend on this HELOC, you're only paying 85 toward interest. So let's look at the car. Same kind of concept. Right now, your car, you're paying it off over 5.6 years. Your payment is $763. Of that, principal is $536. Interest is $227. If you borrow that, if you build the private equity banking account and you borrow it out of there, now you can keep the payments over a 6.5 year period, but now the payment is 606 total. Principal 623 per payment, and interest is only 37. Or you can shrink the time, keep the same payment at 700, and I think it was 63. Your principal is now paying 727 of it, and only 37 of it is going toward interest. In other words, a volume of interest of 4.9. So of every $1,000 that you spend on that car loan to pay back the insurance company, if you've borrowed it from them, of every 1,000, only 49 of that is going toward interest cumulatively. Okay, we got the Visa. It's at 18%. So again, payment 223 of that. 88 goes toward principal, and the majority of it goes toward interest, 135. Your total volume of interest is 60.5. In other words, of every $1,000 that you spend to pay back on that credit card, 605 of that is going toward interest. Again, you can keep the payment the same, and or keep the years the same, 5.2. Now you've got a payment of 148. 141 of that is going toward principal, 7 of that is going toward interest. Or you can shrink the time down to 3.38 years and make payments of 226. Again, of that, 219 of it is going toward principal, 7 of it is going toward interest. So you have a volume of interest. So for every $1,000 you spend on that card, only $30 of it is $30 of it is going toward interest. So let's look at these all in the same place. I know that's been quick, but let's look at this. So here we go. You've got your HELOC, and it's now at 125. Currently, this is what you're doing. So if you do nothing, this is what you get. 1,095 goes toward interest. You're going to pay that off in 14.4 years. Your interest rate is 6.2. Your volume of interest right now is 58.96, so basically 59%. Current interest payment is 645. Cumulative interest paid is 51.34% over time. So even if you pay it off over the 14 years, what that cumulative interest paid is saying that every $1,000 that you pay over the next 14.4 years, $514.30 of it is going toward interest. Cumulative average interest is $563 Total payments 189,293 is what your total payments will be on a $125,000 loan. Total interest paid $64,000. Now, if you put that money into an insurance policy and then pay the insurance company, pay the HELOC off with the loan from the insurance company, now you have $125,000 that you owe to the insurance company. You can drop that payment down to $777. Again, it's a non-structured loan, so in the month where you need that $406, Randy, you don't have to pay it. Don't. But if assuming that you're making the commissions you're thinking and the income doesn't change, then you're free to continue. You're now able to make payments of, instead of $1,095, payments of $772. Again, the interest payoff is over 14.4 years. Your APR is 0.9 instead of 6.2. The volume of interest is 12.15%. Current interest payment on every thousand is 90, or on each payment right now is 93. The cumulative interest paid would be, instead of 51%, it's 6.66%. The cumulative average interest is now 51 bucks. Total payment on a $125,000 loan would be $133,321. Let that sink in. Instead of spending $189,000 on that loan, you're now spending $133,000 on borrowing $125,000. Total interest that you pay on that is $8,032. Or you can reduce it in time. Again, if you're crunched on numbers, crunched on income on a cash flow basis on a monthly basis, this might not be your favorite option. But again, years to pay off goes from 14.4 down to 9.9. You keep the payment at $1,100. Your volume of interest is now 8.52. Current interest payment is still the same. Cumulative interest paid is 4.56 over the entire 9.9 years. And you end up spending on that $125,000 loan, you end up spending $130,698 to pay it back. In other words, a total interest payment on that over the 9.9 years of only $5,698. Again, we can do the same thing here with the car. Currently at 49, your payment's $763. The interest rate, the number of years to pay it off is 6.45. The APR is 5.4. That volume of interest is 29.81. So of every $1,000, 298 of it goes toward interest. Current interest payment is 227. Cumulative interest rate is really 19.1, even though you think you've got a 5.5. Cumulative average interest, average interest is $145 each month, and total payments is $59,000 on a $49,000 loan. You get the idea. You can then do this. You can reduce the payment down to $660, or you can keep the payment at the same. Either way, your cumulative interest that you pay goes from $9,433 to $1,473 or $1,268. Again, there's no way around this unless you do a private equity banking account, and now you drop the amount of interest you're paying from $9,400 to $1,470. I'm not going to walk through the visa also. I mean, you get the idea, right? You got $9,000 you got to pay. $223 is the payment. Of that, $135 of it is going toward interest. And your total interest you're going to pay on that thing is $4,921, or you borrow it from a private equity banking account, and now your total total interest that you're going to end up paying is $216 or $141. So you get a choice. You can spend $13,921 on that visa, on a $9,000 visa, or you can spend $9,216 or $9,141. So if we join all those together and we look at it, you have total interest payments of $78,000, or you can drop that to $10,000. Again, this is if you do the reduce the payment, and if you reduce the time, you go from $78,648 to $7,106. Total amount saved $71,000. So I hope that gives you a better vista of how you can use this. And yeah, we can create whatever you would like to create. I'll send this video over to you right now. And hopefully this helps. If you've got questions, please let's set up some time and chat. If you want to see somebody demo that software for you, I've got a really good friend that can do that for you too. And then you could actually do this on a monthly basis as obviously things change since you are on commission based, Randy. Hope you guys had a great new year. Look forward to chatting with you.